Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, Where Do We Investors Stand? It is Friday, May the 28th, 2026. Let's get started. We will sort by the week under market stuff here. Up at the top, you can see the emerging markets, small caps, really another risk-on week, just continues. And we've got, as you can see, short, intermediate, long-term trend up. For everything pretty much except for bonds. If you look closely there, actually Bitcoin continuing to still consolidate after its sell-off earlier this year. But the bottom line is things continue to go upwards. Just a reminder, pause your video player at any time to dig in for more details. This is my DC ATR model. It's a ATR 20 over price. Essentially, what is that? I mean, it's essentially a measure of how much volatility or how much price movement up or down do we expect out of the S&P 500? And bottom line is when volatility increases, markets tend to come down. And when volatility decreases or resettles, it tends to produce a buy signal and tends to sort of suggest calmer times ahead. You can see the vertical lines here are plotted at each of the times that the DC ATR model rolls over from the top. And we've just rolled over once again. Now, it tends to precede rallies. And again, you may be thinking, my goodness, surely we can't rally from here. Well, all I know is the charts are the charts, and we will continue looking at them. Sell in May or stay in May. This is one of the things that gets kind of thrown around all the time in the media. And again, you can see this is the S&P 500 return. You can see the little diamond up here. We've had actually a very strong month of May. And again, in June, July, August, actually, markets tend to be positive. It's really that fall period, particularly September, more volatility, and certainly October, a lot of bottoms have been made. But the bottom line is the markets continue to trend upwards, and I think continue to confound and surprise many investors. Consolidating silver and gold. We've talked certainly about these at length, not too much in a while here. You can see I've drawn horizontal lines kind of at the real bodied kind of price action of the lows of March. So they did bottom a couple months ago, and so they continue to consolidate. Again, I'm not going to be surprised if they go upwards, but at the same time, we have to give the credit where it is due, and that is the short term continue to go downwards. But again, not really going down the last couple of months. So we'll see whether we get some further traction here. Maybe some buying starts to show up. Perhaps this summer. We will know when we know. Now, on the left side, we got yields, 10-year yields in the top, 30-year yields in the bottom. That, to me, looks like pullbacks in uptrends. If yields are in an uptrend, that, of course, means bonds are in a downtrend. The bonds are shown on the right side of the chart. You can see this is the U.S. long bonds, ticker symbol TLT, bouncing in the context of a downtrend. Again, remember, we got to remember, we always want to stand back and look at the bigger picture. And I think it's very important to continue to acknowledge that global yields have been moving upwards. And again, that is going to cause some problems for central banks, but we've talked about that before. I want to look at Eli Lilly again. I've certainly showed this a few times here, but this is just, again, the importance of looking at time frame. You can see on the left side of your chart, monthly chart, yeah, nothing to see here. It's certainly a 10-year uptrend, and we had that breakout late last year, and essentially what's happened is we've consolidated. Now we're moving higher. The weekly chart, I had shown this kind of trend line break, earlier, and now on the right side, the daily chart, this is when that bar, when on earnings, the stock came back above the 200-day moving average in blue and showed some impulsive buying, and that was where we bought the stock, and essentially it just made new highs this week, new all-time highs. So pretty impressive, right? But so this is where it's so important to not get caught up so much in the day-to-day and to remember what the actual trend is of what we're investing in. Let's look at a couple of biggest bars against. Last week I talked about the Canadian banks, and we had talked about how they've been so strong, and I'd actually said, hey, the yields are not really that attractive. The risk premium really isn't there. Now, these two, CIBC and National Bank, both reported earnings this week and both produced a biggest bar against. Now, what is that again? As a reminder, it is a large, unusual bar, which means candlestick, which means the distance between the high and the low, and it is relative to the prior trend. So if you look at both these over the course of the last 6 months, they've had strong rallies, but again, no doubt about it, those are game-changing bars as far as I look at them. And remember, I never know whether a short-term peak, like in this case, a trend change, is going to lead to an intermediate-term trend, it's going to lead to a long-term trend. But again, the market's done very well, the sector's done very well, and again, so we just push sell and we walk away. Let's look at the next one. Crypto stocks. So Bitcoin, as I already mentioned, has still been pretty weak here. If you look at the left side here, this is a multi-year chart. We've still been consolidating here, 3 waves down, which looks pretty standard. But again, we're still sitting in the mid 70,000 level. And on the right side, you can see this is the BitQ. We've talked about this before, one of the crypto mining ETFs. Now, it's been much stronger, as you can see. I mean, clearly higher highs, higher lows. I've got the same trend line drawn over the same, essentially, bottom here, late 25, early 26. And you can see the BitQ here is approaching prior highs. And so that means from an intermediate term perspective, we're actually overbought and we're approaching an area of resistance. And without the underlying Bitcoin coming with it, I think that's a pretty opportune time to sort of do some trimming. As you know, some of our clients have held this for years. SoftBank. I want to talk about SoftBank. On the left side, the green circles show where we jumped in, and SoftBank is a big Japanese company, but I think most importantly, it actually owns about 87% of ARM Holdings. Now, some of you have heard of ARM Holdings, some of you have not. It's a $356 billion company. On the right side, it has just recently exploded in price in 2026, and they're really the designer of the things that are being designed by all the companies that build processors, right? So all the companies you already know, Apple, Nvidia, Qualcomm, Amazon, and so forth. ARM has been that's who they are, right? So they IPO'd actually years ago. They got spun out, and now SoftBank is actually the largest owner. So if you buy ARM shares in the stock market, it's actually from about 13% of the float, because SoftBank is the largest passive holder. And so again, our clients in the Alton Sync portfolio happen to own SoftBank, but either way, I just wanted to bring that to your attention as one of the many technology areas that has been on fire. Now, software has been pretty weak, no doubt about it. It really continues as a broad sector to be pretty weak relatively. At the same time, I'm just going to show this Oracle set of charts here again, and you can see on the left side, we've talked about Oracle still relatively outperforming the software industry, and on weekly charts, still up, even though there was a 61% sell-off. Now you can see the green circles here, which is where we actually stood in and took a position. And again, I actually added to that position yesterday, and Oracle's continue to sort of work in the bottom here of what looks like a potential bottom pattern, and we will continue to see if that develops further. Now, copper on the right side here, again, a multi-year trend. In fact, this is a multi-decade trend, I should say. And so again, lots of conversation, of course, commodities, inflation, central banks blaming oil. But again, let's be honest, copper is actually the economic barometer, and copper is at all-time highs. So from that perspective, big copper stocks like Southern Copper, shown on the left, have been perking up again recently, but they're not at highs. But I wouldn't be surprised at all if we end up seeing new highs ahead, and we will have to continue to watch that sector as it develops. We'll finish off a sector watch this week. You can see there's the technology stocks just continue to dominate. Another week of that happening. Down on the bottom, we've got energy stocks just continue to kind of pull back. They've been pretty choppy and messy. Again, lots of headlines. I don't even pay attention on this week, but the bottom line is the markets have had a very strong period of returns. Lots of investors continue to be negatively positioned. The sentiment surveys continue to show a level of bearishness, which is actually positive from a sentiment perspective. And lastly, please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.